Hello. My name is Jason Allen. I am a realtor and real estate planner based in Palm Springs, California. It's Monday, October 9th, and I am going to present my Monday market moment for you. Today, I focus on Rancho Mirage. I'm going to share my screen as I like to do, wonky market still. Single family homes in Rancho Mirage. Unit sales 28, so we're up considerably compared to last year. Median sales price $1,105,000. That's down. Median is the house in the middle, half sold above, half sold below. Inventory is down, so we're seeing some absorption here. Days on market is about 60. List to sales price is about 97%. So we are seeing a little bit of a trim, but remember, this is an average. And in fact, what we're probably more likely seeing is some houses going way under, and then at least almost 30% are going at or above to bring this number up. About 3 months supply of inventory. Median sales price per square foot is down about 5%. 40% roughly of the homes are selling within 30 days. 71% are selling within 60, 86 are selling within 90. These are cumulative numbers. So when we get to 86, we're saying 90 days. That includes the 30 and the 60. But then we have a good 14% that are selling later, staying on the market a lot longer. Let me go over to condos. And condos, we are seeing an uptick in unit sales again. Now, not a lot, but still, that's better than a year ago. Median sales price on condos are up. Inventory is up a tick, not a whole lot. Days on market almost 70. Again, sales to list price and those that have had one price reduction still in the high 90s. And 37.5%, almost 40% of units are selling at or above list price with only 3 months inventory in the market. Median sales price, basically the same. 31% are selling within 30 days, 56 within 60, 69 within 90, and then there's a whole bunch, 31%, that are sticking around on the market a lot longer. These are overall good. I will say one thing about condos versus single-family dwellings, where you see the median price is down a little bit, and then condos, it's up a little bit. I'll tell you why. If we go over here to the mortgage applications, look at this big number in the upper right-hand corner. Interest rates at almost 8% takes people who might have bought a single-family home and decided, you know what, I'm just going to buy a condo instead. And mind you, we have condos that are $1 million as well as houses that are $1 million, but maybe they're in the 800,000 now, 700,000. I mean, most of us live based on what our monthly payment is. And when you look at these mortgage applications, and I've done this before, people in our market are taking out, a $600,000 mortgage, and you're in a payment of $4,200 a month. When that interest rate was almost 6%, there's a lot less, 35 versus the other. I mean, that's what's driving prices down in our single family dwelling market. I did mention this. Let me scroll down here so you can see, in fact, here's where mortgage applications are, this blue area. This is where interest rates are. They have an inverse effect. As interest rates are low, mortgage way down here, low interest rates, lots of applications. So let me close with the chart that I get from the good folks over at Chicago Tile, Christian and Shauna Bailey. You can see when we look at prices, while the upper quartiles are not faring well, the lower quartiles are doing fine. In fact, the bottom quartile, this is just humming along. We've actually, if you look back here to November 20, it didn't take the huge spikes, but it also has not taken the big drop-offs. And that, my friends, is why you see this number here going above. People are being pushed into a lower price point based on interest rates, and it's keeping those $400,000, $500,000, $600,000, $700,000 condos very stable. Go back over here very quickly. I like to pause on this. You can zoom in, study these if you want. but it's really the high end that's taken the beating. I'm afraid if you've got a high end listing, it's just going to take longer, and you may end up taking one or two price reductions. We'll see it come back. And let me tell you, if you're in the market today and you find you want that $1 million house, but gee, I should really go for an $800,000 condo, I want you to think about the fact that interest rates will eventually come down. There is no question about it. The housing sector, if you will, think of recessions as sort of rolling or vertically focused. Right now, the housing market is in something of a recession. We're expecting at least 1 million fewer transactions by the end of 2023 as compared to 2022. And so at some point, the federal government is going to have to say, we're going to need to lower home mortgage rates. We're going to lower the overnight rate to banks. That's going to push rates down. And as a consequence, you're going to see more people come back into the market. There's a lot of pent-up demand. So if you're in the market for a house, better to buy it when there is less competition and get the lower price on the house, and then later refinance, assuming you have that as an option. Or if you can pay with cash, you can buy the house and then do a cash out refinance once rates have come down. I will say there are 4 mistakes that people with cash make when they go to buy a house. And I'm going to do a short video segment on those 4 mistakes. I encourage you to watch it. If you are a cash buyer, you can subscribe to my YouTube channel and you get notified when I, in fact, post that. That's it for today. If you ever have any questions about real estate, do not hesitate to call me. I study this on a daily basis. It is what I do. I thoroughly enjoy it. If you are looking to buy a home in the Coachella Valley or sell a home in the Coachella Valley, I would love to interview for that opportunity. Have a great day. Bye.